Welcome back to the Crypto Pulse. Today, we're looking squarely at Bitcoin. It feels like we're in a bit of a holding pattern, doesn't it? We saw that nice bounce off the $80,000 lows, but now we're just sitting here near $92,000.
Exactly. It's a classic wait and see market right now. We've recovered, sure, but traders are definitely uncertain about the next move. The price action is there, but the conviction, that's the missing piece.
Right. And reading through the latest analysis, the big red flag seems to be volume.
It is. That's the main concern. Even though Bitcoin pushed back above $91,000, the volume just didn't show up to the party. We're seeing a divergence. Usually, you want price increases to be backed by rising volume, but we're seeing the opposite. On-chain transfer volume has actually dropped 20% in the last week.
That's a significant drop.
It is. It's sitting at around $87 billion now. And spot trading volume, it's hovering at a pretty low $12.8 billion daily. When you compare that to the earlier phases of this bull cycle, it's really quiet out there. It suggests that speculative interest is weak and investor confidence isn't fully restored yet.
So we have the price, but not the people. Let's talk about the technicals. If we want to get out of this $92,000 mud, what numbers are we looking at?
The analysts at Swissblock are pointing to a very specific range. They say we need to reclaim the $94,000 to $95,000 zone to confirm a renewed uptrend. Apparently dropping below the yearly open of $93,300 was a major shift in behavior, and we need to claw that back.
And what happens if we don't? What's the safety net?
The danger zone is below us. Swissblock says we have to hold above the $83,000 to $85,000 area. If we lose that, we risk forming a lower bottom, which nobody wants to see.
Now, I saw some data from Glassnode regarding a supply wall. Why is it so hard to push past $95,000 right now?
This is fascinating. It's all about cost basis. Glassnode's data shows that a lot of investors, we're talking about 500,000 BTC worth, bought in specifically between $93,000 and $96,000.
Ah, I see. So there are a lot of people holding bags in that range.
Exactly. As soon as the price gets back there, those people are breaking even, and the temptation to sell creates massive resistance. It blocks upward movement unless you have a wave of new demand strong enough to absorb that selling.
But if we do break it?
Then the sky opens up a bit. Glassnode says the next major supply zone isn't until $100,000 to $108,000. Breaking that top buyers cluster is the prerequisite for a new all-time high. Traders are eyeing $97,000 to $98,000 as the final hurdle before testing $100K.
Is there any good news on the horizon, or are we just stuck?
There is a silver lining. Trading data suggests spot markets are stabilizing. The taker cumulative volume delta, basically a metric for buying versus selling aggression, is shifting back to neutral after being negative for weeks.
So the bleeding has stopped.
Right. And if we look back at the pattern between May and July, we saw something similar right before Bitcoin rallied 32% to hit that high near $123,000.
So the potential is there. We just need the volume to ignite it.
Precisely. The market is waiting for a surge in activity. Without that volume, we stay in this range, or worse, face downside pressure. All eyes are on that $95,000 breakout.
A waiting game, indeed. We'll be watching the charts closely. Thanks for breaking that down.
Anytime.